Welcome back to the closing bell on family investment on the 29th of October on the Thursday. Big Q3 earnings from mega big cap companies, but today I'm going to cover 4 key ones on this segment alone. So the first one, we're talking about Visa, Master, Amex. Previous quarter we were speaking about people shopping more from home, shopping more online, and all this cashless transaction went up. However, today the data shows us differently. Visa, Master, Amex are very popular for people traveling, spending abroad, spending in shops. So this cross-border spendings and revenue have dropped for all these 3 companies. And also in Europe, a company called Agent dealing with cashless transaction have also dropped because of air travels are reducing, less people buy online for travel and hotels, and causing this to drop. And Visa, Master, Amex were also affected in this Q3 earnings. Double digit. The stock for Visa and Master are still up, around about 1%. Still doing well, even though despite the drop that's been happening in the last 2 to 3 weeks. Amex lost a bit of ground. But then for the next quarter, we need to think, cashless transactions is great. But if people are actually using these things for spending on travel, hotels, hospitality, out to eat, if these are not being spent on, these companies will be in trouble. Unlike the likes of PayPal, Square, or Alipay, those are different. People actually use them to shop online for shopping, e-commerce purposes. So it's starting to segregate the difference between different types of company serving what types of services. Second one, Facebook earnings. So we've seen Snap, we've seen Pinterest rocketing up to 40% and then coming back down again. So Facebook on the close 5%, and then after the announcement they will drop and then they back up 1% again. So the headlines for Facebook is the declining user. But if you do look closely, EPS, they smashed it. 1.9 expected, they came in 2.71. Revenue, remember they were boycott, 19.8 billion. People are boycotting, Unilever boycotting, and they came in 21 billion, 21.5. So they're doing well. User growth, user active monthly user may have declined, as see on the chart here. Not declined, but it's just flattened out. But then sometimes you put a spin on it. Think about it. Facebook, everybody uses Instagram, WhatsApp. It's becoming part of daily life. I mean, everybody has a Facebook account. Even my mom, my dad, my grandma, I think she's got one as well. But who doesn't own a Facebook or Instagram, WhatsApp account? If the person doesn't own any of the 3, he or she is a weirdo. So I think the company needs to look for other avenues of growth, not just on monthly active users. Revenue is still growing, but I think they need to look at other avenues of growth. But again, Facebook, another strong company, they are still the best in the class. Okay, Twitter. Twitter dropped 12%. Everybody's gone up, but Twitter's dropped 12%. Yes, they've been rallying because of Snap and Pinterest, but now they've dropped 12%. EPS was doing well, 19 cents versus 6 cents. So it's almost like 3 times. Revenue, 936 million versus 777 million, so they've gone up. 187 million active user dropped from 195, so they expect 195, but it dropped to 187, despite the fact that Twitter was most used platform during its COVID-19. But revenue on ads grow, but active user is still a key for Twitter's game, so that's a bit disappointing. It's going down just now. But then again, Twitter is still mandatory for businesses, politicians, famous tweets, and also big companies. It's just a platform that people use still. So Twitter dropped 12%, but let's see how far they will go. So finally, the one that pulls us all by surprise is Google. If you remember last quarter, Google was very embarrassing. Their growth back in the Q2 earnings was negative 0.5. YouTube growth declined, Google's ad growth declined, everything declined. It just went on the chart, 3 quarters of decline. Okay, Q1, Q2 decline. And Q3, they smashed it. Q3 was way better than back in Q4 last year, if you see the chart. So they've basically done a bounce up. So EPS was 16.4 versus 11.29. Google is one of the biggest EPS earner for its share price. Revenue 446 billion, expected was 42. So they smashed it. Google ads came in 3.4 billion, they spent 3.2. YouTube staggering 5 billion compared to 4.39. And then you've got the list goes on. And the growth back now, they're back to the map of 14%. So they could make up the losses in this quarter, and if they do even better next quarter, they could make up the losses which they've encountered in Q1 and Q2. So Google has done pretty well. So I think the stock share price went up 3% after the earnings. poop another 6%. So a mega big cap company going up 9% in a day, it's a lot. So Google owners, Google investors should be jubilating, because end of the day, if you do EPS or if you do any intrinsic value, I think I've done it in the past, and if you put the numbers in, Google should be worth a $2,000 stock. But because without momentum, without the growth figures, it was stagnant at 1,400, 1,500. But with this new data, potentially next Q4 guidance, it might be different. So Google is starting to change. It's something that we need to watch and see. We need more data, and it's starting on a good foot. So this is me on Closing Bell, and on the next episode, I will focus a special episode for Apple and Amazon. So Apple dropped, they beat expectation, but they dropped 5%. Amazon smashed expectation, they dropped 1%. So we need to discuss this, we need to know, because majority watching this are Amazon and Apple users. So I'm going to work on that just now, and I'll see you in a bit. See you soon. Bye.